Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Welcome back. In Part 2, we'll look at the risks, policies, and alternatives shaping packaging decisions in 2026. Economics can collapse fast. If virgin plastic is cheap, recycled resin has to fight for buyers. If a recycler can't sell the output at a steady price, they won't pay much for incoming bales. Then municipalities cut what they accept, and the loop gets smaller. Infrastructure is still uneven in 2026. Many regions don't have film drop-off nearby, modern sorting lines, or steady end markets for lower-grade plastic. That's why people can do everything right at the bin and still see those items landfilled or burned. Why money is moving away from non-recyclable plastics in 2026. This isn't just about public pressure. It's a business reality check. When a material has no reliable end-of-life path, it brings cost volatility, compliance headaches, and reputational risk. Investors notice patterns: rising fees, rising legal exposure, and uncertain long-term demand. Not invested can show up in quiet ways. Packaging lines built around multi-layer pouches may struggle to get expansion funding. A supplier that depends on black trays might face tougher contract terms. Lenders may raise rates for companies with hard-to-recycle packaging because future costs are harder to forecast. At the same time, funding is flowing toward packaging that fits existing recycling systems, plus reuse and refill models where logistics are proven. It's less about anti-plastic and more about avoiding stranded bets. Policy is getting stricter. EPR fees, recycled content rules, and bans that raise costs. Extended Producer Responsibility, or EPR, is a policy approach where producers pay for the collection and processing of the packaging they put on the market. In plain terms, if you sell it, you help fund what happens after it's used. EPR systems often charge more for packaging that's hard to recycle and less for packaging that's widely recycled. That price signal hits non-recyclable plastics directly. A company that uses multi-layer pouches can face higher fees than a company using a recyclable mono-material format. Recycled content rules also shift the math. If a package needs a certain level of recycled content, materials with weak recycling supply chains become harder to use. Labeling rules are tightening as well. Vague recyclable claims can trigger complaints or enforcement when most customers can't actually recycle the item where they live. These policies are expanding in 2026, and they push companies to choose formats that work in real systems, not just on paper. Reputation and demand risk. Brands do not want trash packaging tied to their name. Packaging is a public-facing choice. Customers touch it, post it, and judge it. Retailers and consumer brands also hear from employees, community groups, and watchdogs who track waste claims. That pressure changes procurement. Many brands are shifting to mono-material packaging where possible, paper where it makes sense, or reusable packaging in controlled channels. The goal is simple. Reduce this can't-be recycled moments that frustrate customers. Scrutiny around greenwashing adds another risk. If a package says recyclable, but the average shopper has no local access to recycle it, the claim can backfire. In 2026, the safer path is to make claims you can back up with local reality. Financial risk is clearer now: future cleanup costs, lawsuits, and stranded packaging equipment. Non-recyclable plastics can create long-tail costs. Cleanup programs, compliance fees, and reporting needs don't stop at the point of sale. Companies also face litigation risk tied to misleading recycling claims and, in some cases, pollution impacts linked to packaging waste. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.